market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the U.S. is telling partners to honor bilateral trade agreements despite fresh confusion following the Supreme Court ruling against President Trump's so-called reciprocal tariffs. Now, the president is boosting the 10% tariff rate on all global trading partners, announced on Friday, to 15%. Joining us now is Hugh Gimber, JPMorgan Asset Management Global Market Strategist, and Brendan Murray, who leads Bloomberg's trade coverage. Brendan, count yourself lucky I didn't call you 5 times this weekend, because I was trying to figure out what was going on. I mean, what happens next?
What happens next is countries that have signed trade deals with the U.S. or in the process of working those through are going to reevaluate those. The European Union, in particular, today is going to decide whether they want to sort of put the brakes on their implementation or whether they want to push ahead. They have a lot of questions. There were some posts on social media that suggest that there's a lot of, as they said, chaos in the situation dealing with these new customs duties. And so we've seen the Indians have postponed their trip to Washington this week to reevaluate their deal. So the most important thing at the moment is these countries are saying, what do we still have a deal? And if we do, what are the new terms of it? And we're going to have to work those out. There's a whole host of other issues from the refunds to the political blowback in Congress. Will Congress try to codify some of these deals? But it's put a lot of things that we've seen play out over the last 10 months, called them all into question.
Hugh, what does it mean for the markets?
So here, I think the question is about the benefit of the rebates versus the extra uncertainty that the trade issues are causing. And for me, the latter wins. We already saw last year CapEx outside of the tech sector in the US was down, which is a highly unusual thing to see outside of a recession. And if you're a business now, 3 days ago, you knew the tariff regime that you were working in. Now you have no idea what's going to come, because remember, these are only in place for a maximum of 150 days. And then we are assuming that the administration will be following through with new tariffs, but those are going to be more country specific, more sector specific. So every business now is facing the question of, do I act and say, well, actually 15% could be a good number and therefore I should be front loading, or should I be holding off in the hope of something better? That for me risks putting business activity on hold, because companies simply don't know what's to come further down the line.
Does it have an impact on the more immediate term on inflation?
I don't think it really changes inflation or growth, because we are assuming, even if these rebates do get paid back to corporates, that there's going to be little feed through from corporates to consumers. Similarly on growth, you tend to apply a pretty small fiscal multiplier to any of these kind of business windfalls. So the base case remains unchanged, but what we've effectively done now is just widen the potential range of outcomes. For the Fed, I think they sit tight. For the data, we're not going to see very much of this over the next couple of months, which explains why the bond market hasn't really moved over the past few days, for example. But still, there's just a lot more now that businesses and investors are going to have to be grappling with as this really sort of creates bumps in the data over the coming months.
Brendan, was this a legal issue, or was this also a Supreme Court that was largely appointed actually by President Trump pushing back?
Well, the Supreme Court's decision wasn't really a surprise. The real surprise was how forcefully the president, and immediately the president came back and said, and pushed back and said, you know what, we may even go harder with tariffs. And so the Supreme Court's decision, it seemed like it upset President Trump. He almost seemed angry about it. He lashed out at them personally. It'll be an interesting State of the Union tomorrow night when the justices sit in the front row. And will President Trump call out certain countries, the ones that will be targeted by these new authorities, the 301s? We'll have to wait and see. But he and his trade team have said, we're going to move, and we're going to move quickly to replace the tariffs that the Supreme Court has struck down.
I mean, of course, in the newsroom this morning, we're saying, look, if you're China, you're probably benefiting from this because you had higher tariffs. If you're the UK, you're probably a net loser on this because you negotiated 10%. Could this all change? Again, I don't know when you can actually take an educated guess on who's a winner and loser.
Yeah, I mean, it's not only the economic policy that took a hit for President Trump. It's this foreign policy. It's this tool of leverage that he's used against the European Union. Basically, every country that he's applied these tariffs to, he has said, if you don't do this, I will make the tariff even more damaging to you. That hasn't really where he will meet his match is with China on this, because China will look at this situation and go, we now have a lot more leverage than we did last Friday, and that the two leaders are going to meet in late March, early August, early April, and we'll see how President Trump wants to deal with China more than anything, more than all the others, and he's going to go in with less of a weapon and more of a sort of bureaucratic tool of tariffs than he had before.
Hugh, is there a danger that countries retaliate? This is what we hadn't seen in 2025, which is why, by and large, trade found its way to where it had to be. Could 2026 be different?
So the response we've seen so far has been very muted. You look at the EU's reaction. They're calling for clarity. They're calling for more guidance. Similarly, I think Brendan makes a great point. China is really in the box seat here. But generally, we've seen a very, very reluctant response from countries over the weekend to come out on the front foot. And I think understandably so, when again, this is only a 5-month window where this is set in place before we're expecting further tariffs to come down the line. So it's very difficult at this stage for markets to say, OK, we can try and trade this as a medium-term theme, because this is all just another week where we simply come in on a Monday and everything's been thrown up in the air and you're trying to grapple with what the longer-term impact for corporates is going to be. The dollar, for me, is the most interesting market move here, because if you think about how the dollar could have strengthened, Supreme Court ruling to say this can stay in place. Well, previously that was viewed as a dollar negative story when these were first implemented. Now you have the Supreme Court overruling and the dollar saying, well, this is more uncertainty, therefore dollar down. We see the new path for the dollar as lower and think that last year was just the start of a multi-year trend.
Hugh, what did we learn? I mean, I remember, April 1st, Liberation Day, felt like it could have been the end of the world. And then the markets bounced back and everything was back to normal. How much does that inform the markets about how they deal with this?
Well, for me, the key reason why markets bounced back last year was because of the fiscal response. So the trade hostility from the US brought Europe together. We've seen it more recently in Japan. We've seen a stronger response from China as well. So this is why markets were able to look through that trade news. I think with this latest development in mind, one thing I'll be looking out for tomorrow evening is the guidance on more fiscal stimulus to come in the US later this year. We were assuming that ahead of the midterm elections, there was going to be another round of consumer-focused stimulus, potentially along the lines of a tariff rebate. I think that explains why Besant was so quickly to come out over the weekend and say, we are going to recoup all of the tariff gains that we thought we were winning before. It probably explains that 10 to 15% jump on Saturday as well, because in order to balance the US books, they need this revenue to be able then to boost that consumer spending position.
What are you looking out for, Britain, apart from the State of the Union? There's also a big China trip, I think March 31st, actually, with the president.
I think and Hugh brought this up, the rebate, the refund situation is going to get very nasty. The Democrats over the weekend were already saying these are going to be the fact that the administration is kind of shrugging off the refunds and saying, oh, those are going to get bogged down in court, for months or years. I think President Trump even said, yeah, fine, those will be in court for 5 years. Those are going to be very difficult for the Republicans to explain away if the government has taken $170 billion worth of taxes from the American importers. That's going to be very difficult for them come August or September, when the 150 days runs out, to say, we still haven't gotten our administrative system set up to give you the refunds yet. There's going to be a backlash to that. There's going to be a price to pay politically, potentially, for the Republicans and President Trump.
Brendan, I mean, sector by sector, is that how we should be looking at it? I know I've had a couple of viewers, thank you always for sending me emails as well, saying, look, Gemini says that he could then roll over 150 and 150 days each time. I mean, the legality of all this, we just don't know.
Yeah, exactly. There were a number of legal scholars and economists posting on social media all weekend is maybe this Section 122 is even more legally dubious than the IEPA was, but that doesn't matter because you can litigate that for years, probably well past the 150 days. The basic understanding is that Congress will need to reauthorize an extension of it, and if you're a member of Congress, do you really want to be putting your hand up in favor of taxes on American importers 2 months before you face re-election? So that's going to be a sticky issue and something that the administration will want to get these other authorities out there so they don't have to deal with that eventuality come mid-August.
Hugh, I like the fact that you really pointed to dollar dynamics as one of the biggest things that you're watching out for. I mean, does the administration have a problem with too weak a dollar?
No, it doesn't, because you're coming from such a strong starting point. So even when you look at last year's move, the dollar still looks overvalued on most traditional metrics. I think actually a weaker dollar here for the US is quite a happy thing. It's enabling them to work towards that long-term goal of reshoring manufacturing. For Europe, maybe the question here is slightly different, because although a weaker dollar is no bad thing, a much stronger euro for European officials has already been flagged as a concern this year. And we see really that kind of 120 number as the threshold beyond which the ECB would be getting much more nervous. So if there's one area where I think my thinking has changed over the past couple of days, it's about the outlook for Europe and rates as well, where this idea that the ECB has been telling us they're in a good place, we're on hold, nothing to see here for some time, you have to keep in mind the euro within that discussion. And if we do see this feed through into the euro pushing towards 120, I think we'll be quite quickly talking about the potential for another interest rate cut to come from the eurozone this year.
In the first 6 months?
I mean, it depends on the pace of the move. I suspect that's more of a second half story, but we've already had Friedrich Merz talking about this already this year. We've had several members of the Governing Council, and so clearly they're going to be wary of coming out too quickly to say, here we are looking to weaken our currency, but I do think that feeds through into the discussion as we push into the second half.
Hugh, before I let you go, on US-Iran tensions, is there a potential, closing down the Strait of Hormuz would be a huge deal, which even the Iranians don't want to do. But is that a probability, or is that something that you have to game theory, or are you just looking at the price of oil? Yeah, oil markets are clearly welcoming the rumours so far that we might be heading towards some kind of framework for a deal between the US and Iran. Ultimately, you think through the lens of the midterm elections, it is in the US interests to not have an extended spike in oil prices. I think that has to be the framing for following all of this news, and therefore, even with the threats that we heard over the past couple of weeks, this was talk about a very, very targeted, very, very specific strike on Iran. I think a much more widespread and longer-term disruption is in everyone's interest to avoid, not obviously just because of the humanitarian aspect, but because of the pressure on US prices that oil spikes would cause, and therefore, to Brendan's point, some of the challenges that could be facing the US consumer. But Brendan, given we do have the midterms, is it possible that the president actually cools off the trade if he sees there's too much disruption at the company level?
Yeah, exactly. This is the opportunity that President Trump has, is to take a more deliberate, slower, targeted approach to tariffs, and sort of pull back from the more disruptive approach that characterized the past 10 months. That could help settle things down. It could actually create more certainty if the administration does this in a sort of procedural way that people can see what's coming, what the tariff rates are, and who the targets are.
Okay, thank you both for getting us started this Monday morning. Hugh Gimber, JPMorgan Asset Management Global Market Strategist, and Bloomberg's Brendan Murray, in charge of that little thing called trade coverage for us. Coming up, President Donald Trump says he's still considering limited military strikes on Iran if a new nuclear deal is not signed. We have the latest next, and this is Bloomberg.
Tomorrow, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
Now, U.S. President Donald Trump says he's considering limited military strikes to pressure Iran into signing a new nuclear deal. The statement comes as the U.S. and Iran are set to resume talks in Geneva, with the Iranian Foreign Minister Abbas Araghchi expected to meet U.S. Special Envoy Steve Witkoff on Thursday. Well, joining us now to discuss all of this is Bloomberg's managing editor for the Middle East and Africa, Paul Wallace. Paul, thank you so much for joining us. So first of all, how close are the U.S. and Iranian officials to find some kind of framework, a negotiation for a deal to avoid the strikes?
It's very hard to tell, but I think the fact that so the U.S. has not yet confirmed that talks will be on Thursday, but both the Iranians and and Oman, which is the main mediator between the two sides, are saying Thursday looks likely. So I think the fact that they are going to round three is significant, and it suggests we are nearer to some kind of deal. It doesn't mean we will get there, and as far as we know, the Iranians still have to provide the Americans with written proposals. So the two sides met in Geneva last week, Tuesday. The conclusion to that was that Iran would give written proposals to the U.S. The U.S. would look at them, and then if they were satisfied, say, OK, let's go to the third round of talks. But if they do happen on Thursday, I think that's, a pretty good sign for those who want diplomacy to work and want to avert strikes.
Paul, do you have a good reading of what the U.S. actually wants in these negotiations?
Again, a big question. Each side is saying slightly different things. The Iranians are saying we are only talking about nuclear issues. They're saying there's no way they will accept zero enrichment, i.e. they want to be able to enrich uranium at least to a small level. The Americans are still implying that the talks cover other things. They're implying that the talks cover ballistic missiles that Iran has and that are a big threat to other countries in the region, and also proxies. And they're also saying they won't accept any uranium at all. So it's quite hard to square these positions, but I think knowing what we did going into these talks, that's not such a big surprise. One way or another, if Trump wants a deal and the Iranians want it, they'll be able to square those positions somehow. It won't be a deal that, if they do get a deal, it's not going to please everyone. The Israelis are likely to be unhappy with it, but they may just get there.
I mean, do the Iranian side really feel pressure because of these potential strikes? And could it be like a Venezuela, like targeted strikes? Or what do we know about the military implications of it?
So, yeah, the Iranians clearly feel the pressure on that. They're being pretty defiant, and if anything, they're in public, sort of staying quite calm in the face of this huge buildup of U.S. military forces and naval and air forces in the region. Interestingly, Steve Witkoff, who heads the U.S. delegation in these talks, spoke over the weekend to Fox, and he sort of said that Trump was a bit surprised that Iran wasn't showing more pressure in these talks, given that build-up. But it is there. However, Iran has a pretty high pain threshold, and it sees the war in June between itself and Israel and the U.S. as a victory. Now, for a lot of people, that seems absurd. It got absolutely battered, lost way more people than Israel did, but that's how Iran works. It sees that as a victory. It sees and it has a fair point with this, it saw the U.S. as the one calling for the ceasefire at the end of it, not, Tehran itself. So, it has a high pain threshold. If it goes to war, it probably thinks that, it can drag it out for like a month, and, it will be thinking that will look bad for Trump domestically in the U.S. and all this. So
interesting. Paul, thank you so much. Paul Wallace there with the very latest, of course, on these talks, but also these potential strikes. Now, German business confidence brightened more than anticipated in February, adding to hope that Europe's largest economy is emerging from its malaise. Well, we're now joined by Clemens Fuest. He's president at the IFO Institute. Mr. Fuest, as always, thank you so much for joining us. First of all, I mean, I guess we're in trade chaos, not really understanding what happens to this trade and tariffs from the U.S. What kind of implication does this mean for Germany?
Yes, it's a problem. So there are people who hope that tariffs will be lower in the future, but what's happening is that uncertainty increases significantly. There is now uncertainty about whether the US-EU trade deal will hold up, and that is, of course, a burden on the German export industry, and this is a problem.
So is the German recovery happening? Are you confident that the way from now on is up?
It is the case that the German economy is showing signs of life, but these are coming mostly from domestic demand. If we look at the companies reporting improved expectations and data, it's mostly companies related to fiscal stimulus within Germany, whereas exporting companies continue to have difficulties. So it's really the fiscal package that is producing some stimulus here.
When you look at some of the package, of course, as you're mentioning, on infrastructure and defense, how does that help this year, but also into 2027?
So what we expect is that it will help in both years. It will probably become effective in the second half of the year, but the 1% or so GDP increase we have in the forecast at the moment for Germany in 26 are mostly coming from this fiscal stimulus. And in a way that's good because it's supporting the German economy. At the same time, it's a bit worrying because it's only driven by public sector demand. What we would like to see is an upturn which is broader, coming more from the private sector, from private investment, but that's not visible yet. Nevertheless, in 26 and 27, we do expect Germany to return to growth driven by fiscal stimulus.
Mr. Fuest, when you look at weaker dollar, it means higher euro. How problematic is this for German companies?
It's not ideal. At the same time, one has to see that the US, for instance, has a share in German exports of 10%. That's significant. It's an important export market, but the most important market for the German economy is the European Union, and German exports are very diversified. So dollar weakness is unwelcome, but it's probably not the main issue we are facing at the moment.
Mr. Fuest, when you look at some of the other measures that the government could be putting in place to really fully have the biggest impact on the economy, what would be your number 1 and 2 priority?
It would be to complement this fiscal stimulus with structural reforms, in particular reduction of red tape, a shift in energy policy to improve the efficiency of the energy systems, fiscal reform, tax reform. The tax burden on investment in Germany is the highest in the G7. Those would be the priorities.
Is there anything else that Europe could do to basically fully help? We talk about, also a higher euro maybe leading to a cut from the ECB. Could that boost Germany's growth a little bit further?
It could help. At the same time, the ECB needs to look at overall European growth and inflation. Of course, inflation is coming down, so there might be room for more cuts. But would they move the euro very much? I rather doubt it. So what the EU could do would be more on the structural side again, make sure that the Mercosur and India and more trade deals are coming along, and maybe getting back to liberalizing the European internal market. The EU with its internal market does have a growth machine, but it's not been used very much in the past. There are still barriers. So an agenda promising more economic integration within Europe would help Europe as a whole and Germany in particular, of course.
Thank you so much, Clemens Fuest, the president of the IFO Institute, for a good rounded conversation on Germany's economy. Coming up, we'll discuss the turnaround going on at Estée Lauder. Stéphane de la Faverie, president and chief executive of the company, joins us next. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Tariff uncertainty hits appetite for U.S. assets after the Supreme Court strikes down a key part of President Trump's trade policy. Donald Trump says he's still considering a military strike on Iran, with nuclear talks set to resume in Geneva this week. Plus, a powerful winter storm sweeping the U.S. East Coast has shut down the vast majority of flights from the biggest airports, including New York and Boston. So one of the biggest names in the beauty business is in the middle of a corporate overhaul. The pressure is on Estée Lauder to improve performance after it warned investors that there was more work to do. And that's despite shares rallying over the past 12 months and the company beating expectations with its latest results, boosted by growth in skincare, including La Mer and The Ordinary, and fragrance, including Tom Ford and Le Labo. I'm delighted to be joined by Stéphane de la Faverie, who took over the helm last year and has faced various challenges, including tariff and trade uncertainty. He joins me now. Stéphane de la Faverie, thank you so much, and welcome to the Pulse. There's just a lot going on. There's a lot going on in terms of tariffs, in terms of trade. I mean, you reported some quarterly earnings. Shares plunged, and that's despite actually a boost to the outlook. So how did you internalize that?
Well, thank you, first of all, Francine, for having me again. You know, when I laid the strategy a year ago, when we met of Beauty Reimagine, we made a set of promises. And what I'm very happy is that we've delivered on these promises, first of all. I think we've moved with speed on consumer coverage. We've increased our innovation dramatically. In this moment in time, consumer wants more innovation. We've promised that we would go at 25% plus of our sales coming from innovation. We've also increased our investment because it was needed for us to increase investment to reboost sales. And as a result, the first 6 months of our fiscal year, we've actually increased sales for the first time in 3 years. The last quarter, as you saw, we produced 4% organic sales growth, which is the first time in 3 years that we are in this position, with many markets like China, in the US, where we are gaining share. So we have momentum, and that's very important for us. You said it, over the last 12 months, I think the stock price has recovered close to 50% of its price. And the interesting thing is, like, obviously in the last quarter, there was a little bit of a dip, but the market reacts on the short term. We are looking at the long term, and I'm really confident that we are putting the right foundation for acceleration.
I know, for example, you gained share in volume in the US, but not so much in value. Is that because of prices? Are you more sensitive to price increases?
I think there is some, with the volatility that we're seeing around the world, we're seeing some consumer confidence being a little bit subdued, that it is in China, it is in the US. But for me, it was really important in the US, after many years of market share loss, that we could reignite recruitment. And that was the most important thing. And we're seeing the volume going up. Now, we have a pyramid, as you know, of brands, from La Mer all the way to The Ordinary, that allows us to just, like, you know, capture this consumer. And The Ordinary has been a resounding success for us, like in the US and around the world, that is moving a lot of unit in this moment in time. So we are tailoring, depending on the consumer confidence in the different places around the world, with the portfolio of brands, again, from La Mer, of very luxury tier, and also brands like Tom Ford that you've mentioned, all the way to Estée Lauder, Clinique, and The Ordinary, where we have some great momentum. So
how consumers are buying differently in the U.S. compared to, for example, China, where Asian travel is a little bit more subdued, except we did have, the Chinese Lunar New Year.
Yeah, no, it's interesting. I think historically we've always seen consumer buying differently by category. You know, we are in skincare, in makeup, in fragrances, and in hair care. Obviously, the East, China, and many of the other Asian markets are much more indexed in skincare. And the recovery that we're seeing this year, and we've been able to post double-digit growth in the last quarter, actually 13% growth, shows the strong desirability of our brand, led by brands like La Mer and Estée Lauder, and even The Ordinary, that is only in its first year of launch. In the US, it's a little bit more balance between the multiple categories, and what we've seen is a very strong acceleration of skincare, especially at the entry price point, but also perfume, that has been a astounding category in terms of growth since, COVID.
Can you talk to us about tariffs and trade? I mean, we have all this uncertainty over the last 2 to 3 days. What does it mean for a company such as Estée Lauder?
Look, first of all, the news was announced on Friday, so we are monitoring a lot some of the decision. I think it's still too early to understand the impact, but I like to say we are entering our 80th anniversary. We are 80 years young. So we've seen a lot of volatility. We've seen pandemic. We've seen trade tariff. The good news is that we have a very well-diversified network around the world from a supply and a manufacturing. We have 9 manufacturing sites around the world, 5 in North America, of which 2 are in Canada, 3 in Europe and in the UK, and 1 in Japan. That has allowed us to just use some of the trade tariffs in a way to our advantage, and really just be close to the consumer, because the strategy for us was always to manufacture close to the consumer because we want to be the most locally relevant consumer company in the world, but also to be close to the consumer.
What can we expect in terms of M&A? Is there something that you want to get rid of, or are there targets that you'd like to acquire in the next 6 months to 12 months?
So it's a very good question, because for us, we are in a period of execution. It is very important that Beauty Reimagined, we are at the beginning of this journey. The first year we've delivered on our promises. The second year for me is about now accelerating the growth and making sure that we are simplifying the ways of working. We are rebuilding profitability, but at the same time, we are looking at our portfolio. So we have, and I've been very public on that.
Yeah.
We are looking at the portfolio, and we will always be part of the M&A discussion. Like, if you look in our 80 years history, we've bought a lot of companies. Lately, obviously, The Ordinary and Tom Ford were part of it. But M&A is not only about buying something new, it's also about incubating new brands. And we are incubating a lot of new brands as part of like DCM or taking minority investment. One of the last one was Zinu, a really fantastic brand that we've taken a minority stake in Mexico.
Stéphane, when you say, we're looking at the portfolio, are you going to buy more than you're selling?
So the future will tell. We are constantly looking. But, as a CEO, I've been really committed that we are always going to be on movement. We have fantastic brands. Our top 7 brands, from Estée Lauder to La Mer, Clinique, MAC, Tom Ford, Jo Malone, and The Ordinary, are fantastic brands. And, the reality is like the market is changing. Consumer tastes are changing. And so we are looking in the current place in our portfolio. But again, it is going to be about organic growth and inorganic growth. I think the future is going to be about making sure that we are balancing both.
On Amazon, you were maybe a little bit slower than some of the others to get onto the platform. How are sales on that platform going, and what did you learn?
Well, fantastic. We love, first of all, the partnership with Amazon has been fantastic. And we are looking at Amazon more so as a marketing platform than only sales platform, because it allows us to just acquire new consumer, re-engage with lapsed consumers. Today, we have 12 brands in 10 different markets. So you noted that we were a bit slow, but on the execution in the last year, we've been really, really fast with great success. And the first brand that we've launched was Clinique over a year ago, and we've deployed many brands in many markets, and there's more to come.
What did you learn about selling on TikTok? Again, is that different to selling on Amazon, to selling through your retail stores?
Yeah, I think on TikTok and TikTok Shop, you have to be on the trend. And this is what I love about beauty. You have to be there also to be in culture. And it's much more impulsive, but you have to be there, and it's usually what the strategy of hero product is what works. For instance, you look at MAC. We've just launched MAC on TikTok in the US with great success, and people lashing on the new innovation. So this is also one of the reasons why I've put the accent on innovation acceleration, because these new social media platforms, that is TikTok Shop, or you have Douyin in China and others, are really where consumers are discovering what is new.
But it also means it goes really fast. So I think one mistake and it's I don't know whether there's a strike and you're out. Is it more like roulette?
Well, no, because I think today in the world of AI, we have a lot more information at the tip of our finger. We are harnessing millions, if not billions, of data points. And our role is to really listen to the consumer, but also to anticipate their need. So one of the reasons why I've put the accent of not only increasing innovation, but also to tripling the innovation that comes to market in less than a year is really also to just follow this trend. But at the end of the day, we have a lot of information that allows us to just increase the rate of success. And today, I can tell that in 2025 and in 2026, our rate of success on innovation is much greater than in the past.
On what exactly? Again, is it makeup, or is it skincare, or is it across the board?
Across the board. The one category that also allows us to just go faster to market is makeup.
Right.
But because skincare, you have a set of product that requires longer testing sometimes, but definitely makeup allows us to go faster.
Stéphane, what are you most worried about this year, and what are you most excited about?
What I'm most excited about is how our team came together, and we are in the midst also not only of the transformation, but establishing our new culture of one ELC. And this culture allows us to be bolder, to be more agile, to be faster, to be more entrepreneurial. And this is what I'm the most excited about, how the team is. What I'm worried about is the external environment. But all the time, you cannot control geopolitics. What I can control is how do we run our business, how do we react to anything that is happening out there. So honestly, I feel really good about the momentum that we're having, and I feel that we can really go and build on it and accelerate for the future.
How much time do you spend with your staff in actually explaining? I know, for example, after your results and the share price goes down, again, internally, did you spend a lot of time talking to employees, making sure that they were okay, that morale was still high?
I spend an enormous amount of time with my team, not only traveling, but also in town halls. I host, town halls every quarter with thousands of employees around the world. This is part of my mission. I've always been like that as a leader. I believe in close connection with the team, and this is why it is important in this moment to just evolve also our culture, because the success of the acceleration is also about the change and the evolution of the culture. The values of the Estée company are what they are, and they are fantastic. Again, 80 years young, of strong values, but we need to evolve our culture and to go faster, and that's also by touching and speaking to all my teams around the world, we have a fantastic team, we have a fantastic portfolio of brands, and I know we are up to a very strong acceleration for the future.
Anything particular in China for the next 12 months?
So China has been really good. Actually, I was with my team in China on the phone this morning, asking a little bit how things are going as we are finishing Chinese New Year. So I was trying to leave them alone during Chinese New Year, but very good. We are off to a very strong start of the calendar year after a very strong finish of last year. We're seeing a really strong acceleration. One of the things that is exciting for me is to just see how each categories are accelerating. We're seeing perfume accelerating in China even faster than before. Historically it's been 60 to 70% in skincare. Now we're seeing also many other categories, and it's a country that is fascinating because you are balancing brick and mortar and online in a way that you can build experience in a way with the consumer that is like nowhere else.
Stéphane, so the last question is on the hot new thing in makeup. I'm told 2026 is going back to 2016, so it's a lot of colors, a lot of outrageous things. How do you see this?
Well, I see it's interesting because 2016 was about bold expression of color, and 2026 is more about fun and expressive. And in that case, there's one brand like Clinique with Black Honey, which is a product that is decades old. I've always sustained the test of time, and you are seeing today this product being viral again.
Stéphane, thank you so much for joining us. Stéphane de la Faverie, their President and Chief Executive Officer of the Estée Lauder companies. Coming up, much of New York City has shut down as a big winter storm hits. We'll have the full details next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, in the U.S., 41 million people across the East Coast are facing blizzard conditions from a powerful winter storm. Most flights out of the region's largest airports have been disrupted. Schools are closed. Well, ABC's Lionel Moise is in New York City. Lionel, good morning. Thank you for being there. How badly has been transport and daily life been impacted?
Good morning. Yeah, this has been coming down very constantly. So they have been warning people to do what they needed to do and get off the roads. There is a travel ban that is in effect. It's been in effect since 9 p.m. and it lasts through noon. The conditions are bad. They have been around me plowing. You can kind of probably hear the plows in the background. As soon as they finish one plot, the snow has already covered it again. This snow is also falling, as you want to say, horizontally, which makes it very hard to see, even if you're just walking on the sidewalk.
Is the city well prepared, Lionel?
It seems like the city is well prepared. Again, we saw the salt trucks, we saw the plows out, but this is a very big city, and that doesn't mean that there won't be some issues. There's already been a snow plow that actually overturned on a highway, which led to a hazmat situation, which is another reason why they are just warning people to stay inside if they can. Kids in the city are a little bit excited because they do not have remote learning. It is an old school snow day, so they do not have to clock in. But that also is probably because the teachers and all of the staff need to take care of themselves as well in this weather. And again, the snow is supposed to remain constant throughout the day. We're going to be feeling these impacts at least through the afternoon.
I mean, I remember the snow days. It was the best. Lionel, talk to me a little bit about how much snow there is now. I think it's more than 20 inches, and how much more is expected.
Yes, we have been forecasting that it could be up to 24 inches for some areas. One town in Staten Island already got a foot of snow, and on average, we're seeing about 3 inches an hour, which really is a lot and hard to stay on top of, keeping the roads and the sidewalks clear as well. Very, very beautiful sight, but also very, very dangerous conditions to be in.
When are we expecting the airports to reopen? Is it too soon to know exactly when?
It is hard. We have people, lots of my coworkers are even stuck and unable to get back. A lot of flights have been canceled until at least Wednesday. The hope would be that Tuesday some of those flights will still be able to go out. But of course, as we know, anytime something like this happens, there is a ripple effect, getting the pilots, getting the flight attendants to their destinations to be able to get those flights taking off. So some people will be stuck for a few days.
Okay, Lionel, thank you so much. ABC's Lionel Moise there reporting from New York City. Now, the dollar has dropped along with U.S. futures as uncertainty over trade policy dampens sentiment on U.S. assets and raises the prospect of heightened volatility across global markets. Let's bring in Ven Ram, cross-asset strategist at Bloomberg MLive for more. Ven, thank you so much for joining us. So what stands out to you from the market reaction this morning?
Morning, Francine. I think that the big discussion in the markets is about what is happening to the dollar, because if you look at the Supreme Court ruling and some kind of data that we got out of Europe last week, at the end of last week, actually, all of them portray a picture where, investors wouldn't want to be long the dollar. That policy uncertainty is enough of a stopper. I mean, are the traffic lights green or are the traffic lights red in the US? No one knows. And that policy uncertainty is damping sentiment. But if you look at the euro area data out of last week, Francine, we got data that showed that the European Union current account surplus was almost doubled in December. So the European Union, in other words, seems to be benefiting from the policy uncertainty in the US and the European Union being a natural creditor, external creditor to the rest of the world, augurs well for the euro. And also the fact, if you look at the trade data that came out of the US last week that showed that the trade deficit widened to $960 billion last year. That was the highest in decades. So this trade tariffs clearly are not working in favor of the US, and that reaction is impinging on the dollar's valuations today.
Ven, what does it mean for gold?
Well, I think that gold has short-term buoyancy because, what we saw in the past four sessions, it's surged 6%. And I think there is that short-term momentum that was desperately lacking after the January record. It was, for a point of time, both silver and gold lacked that short-term momentum to take it higher. But I see that momentum has come back into gold. So I think that, if the geopolitical tensions surrounding Iran escalate, and it may escalate over the weekend, if it does so, then I think that gold has further to go.
Ven, thank you so much. Ven Ram there, cross-asset strategist at Bloomberg MLive. Ven was mentioning Iran. Well, U.S. President Donald Trump says he's considering limited military strikes to pressure Iran into signing a new nuclear deal. Well, joining us now to discuss all of this, Sanam Vakil, Chatham House Middle East and North Africa Program Director. Sanam, thank you so much for joining us. What do you think the end game for the U.S. is at the moment? Are we going to have something meaningful in Geneva on Thursday?
Well, good to see you, Francine. I think all eyes are on Geneva because the president has put down one of his deadlines. And it's clear that if the talks in Geneva do not produce a deal to constrain Iran's nuclear program, I think attacks are imminent. The U.S. has assembled the largest military deployment in the region since 2003. And all reports currently indicate that the U.S. would use strikes against Iran to pressure the Islamic Republic to make a deal. I think what's perplexing for the United States, and this was reported over the past few days is that Iran, despite all of this military pressure, is still insisting on maintaining its rights to enrich uranium, and it is looking for a face-saving solution.
But Sanam, overall, would the U.S. actually want a regime change in Iran? It's unclear to me. I mean, the strikes would be to get them to the negotiating table or to sign a deal, or would it be Venezuela style?
Well, I think, it's important to remember that over the past month, we saw protests in Iran. Those protests were deadly. They were the largest protests we've seen across the country, and the government responded in the most brutal way, killing around 7,000 people. That's what the number that's currently been verified. But despite this internal unrest and despite the external pressure on Iran, the system and the state seems very much in charge. And so I think the Trump administration has recognized that this is not a copy-paste to what we saw at the beginning of the year in Venezuela. It's not as if you can take out Iran's supreme leader, Ali Khamenei, and find an internal replacement that will be more pliable to U.S. interests. And so they are playing out the diplomacy runway for the time being in the hope that they can arrive at a deal. It's really unclear if the Iranians are going to make the necessary concessions. And what Iran is seeking is a right to maintain enrichment for research and medical purposes. And what they need to compromise is substantial sanctions relief. And last summer, again, if you remember, the U.S. did strike Iran's principal nuclear facilities and buried much of its nuclear program. So, this is sort of where we stand right now.
Sanam, what can you tell us about the protests? I mean, does the U.S. want to limit the deaths because of the protests? Would that also push them towards a regime change?
Well, I think here, again, let me reinforce that regime change in Iran is going to be a much more difficult ambition. Donald Trump has criticized past American regime change efforts, specifically the 2003 Iraq war that was costly for Americans in terms of life and in terms of investment. What he seeks to do is use military strikes to pressure Iran to make a deal. He is not talking about necessarily regime change, but perhaps changing the regime. And that would come through maybe targeted strikes against Iran's leadership. But again, here, this isn't going to be a one and done. Iran has made it clear that it intends to respond and respond forcefully, attacking perhaps American partners and allies in the region like Israel, but also striking back against American military bases and infrastructure. So this really risks being much more of a deadly confrontation. Iran is certainly the weaker party, and you can see from the deployment of U.S. military assets in the region that obviously the U.S. has the staying power and the ability to pummel Iran quite seriously. But we just have to see if diplomacy plays out positively on Thursday and then reassess from there.
I mean, if there was a military strike, how much does this escalate, actually? Does Iran have the capabilities to fight back?
I think Iran would very quickly try and export the instability across the region. That is its only strategy. It would target, of course, I think, U.S. facilities, perhaps American partners, Gulf infrastructure, all to raise the cost of this war and try to bring it to an end as quickly as possible, and then return to the negotiating table.
Sanam Vakil, thank you so much for joining us. That was the Chatham House Middle East and North Africa Program Director. Up next, it's Bloomberg Brief. Vonnie Quinn is here in London, and this is Bloomberg.